Hello traders, 'tis I, the rumpled one. It is Tuesday, August the 6th, the year 2018. Let's talk trading. Emotions. Do you see red when you're trading? And I don't just mean red in the portfolio, but do you let your emotions get the better of you? Do you yell at the screen? They can't hear you. I know. I used to yell at the screen a lot. Now I just laugh. I mean, when you think about it, you put that trade on, and next thing you know, you're down 5 pips. It's just like, really? Even though that doesn't happen to me that often anymore since I wrote that spread dots. But anyway, I just want to say that just, don't let your emotions get the better of you. Calm down, breathe, and stick to your plan. I mean, so long as you stick to the plan, it doesn't matter if the trade you're in is a winner or a loser. If you get stopped out, that's okay, because that's part of the plan. And you will see, over the course of about somewhere between 50 and 100 trades, if your plan's really working, if your method's working. But you have to be honest. You have to keep track of, did you follow the plan perfectly, or did you airball it, a seat of the pants? Did you just, were you too slow? Were you too fast? And just be honest. And then you take the losses in stride. I mean, you've seen those baseball players, they strike out and they go, break their good bats and get all crazy. Doesn't do anything. Or the football player that missed something, walks to the sideline and throws a helmet. I only threw my helmet once. I mean, I was taught at a very young age, take care of equipment. But I only threw my helmet once. Coach kicked me off the field because I wanted to call one play and he wanted to call a different. He wanted me to stick with the same play, and if I had called my play, it would have resulted in a huge gain. But that's that's just the way life is sometimes. But the point is, just don't get emotional, because it might cause you to do something you'll regret, like pick up your laptop and fling it across the room, or punch your big 36-inch screen out. You don't want to do that. So let's take a look here and see. If you have your money in risk management in, you're only going to lose what you're willing to lose. So you're willing to lose it, so there's no reason to get mad. I mean, think about it. You said you're willing to lose, $10 a trade, or $1 a trade, or $100 a trade. And so you get stopped out. No reason to get mad. And just wait for the next trading opportunity. You might make that back and then some. So here we go. We've got the yen going down. You see here, just 6 pips off the monthly low, which is the weekly low and daily low right now. So you can see it entered the monthly wick zone and came out, and it looks like it's about 60 some pips. Oh yeah, or 76 pips below that open there. I mean, these simple trades, I don't know why people have to use squigglies. It just doesn't make sense. And here we go again. You can see on the week, entered the wick zone and left it. Oh, and look at this. All the gaps have filled. So, once again, those weekly gap traders got paid off. And see, that's not hindsight. And we're at the daily chart. You can see here, just barely got into that wick zone, came out, read at the line. You could go short. And once again, we've got anemic trading only one pair over 100 pips. And here the buy zone. And you see the pivot was actually between the short and the open. So even if you wanted to fade the pivot, there was only 4 pips to grab, but you could have picked that up and then some. As you see here, if you would have faded the pivot and say, well, let's see, do we get to the short zone? Because you were never in danger. And once you hit that pivot, you could have brought your stop up to open -1 right there, and you see it never even challenged it. There was a winner here, a winner there. Even if you stayed in that trade, it paid off again. You see you had the weekly open there, crossed below there. Once again, simple horizontal lines, simple trading. Rat zone, barely a rat zone, but you can see here we have a nice reversal off that bottom, red, green, long at the green, right there at that high break. That's also you got a turn trade here, which is red, green. And this is a continuation. And we already saw what happened with the pivot. Once again, pivot was taken out. And what do we have here? Price action, right? One ball at the bottom, green at the line. Not much to be had here. You see, if you stayed in that trade and it came here, then it turned around right here. See, when it went above there and came back down, there's your opportunity to get out right there. One ball right at the line. 3 ball looking for a green at the line right here. Simple stuff. So simple. And you can see here that double O or triple O now, that extra with the point instead of the pip. I know, broken record time. Red at the line, go short. Green at the line, go long. I mean, here we've got, the weekly close minus open and the monthly close minus open. Just trading away from the open. Here you go short, hundreds of pips. There's short, hundreds of pips. Here you go. There was a long, hundreds of pips. It's not that difficult. And you see here you've got some pairs. Magenta, you're right around the open. So you can take the open crossover or do a buy zone off of the open. One of the two. Or both. Wick zones. Price doesn't like staying in the wick zone. Went in, and came out. And we've got the holo set up. You can see right here, there was the highest open. And opportunities to get short from there. And here we just had a lowest open right here. And the inventory reduction bars. You see we had a couple of shorts up here, another short right there. Now see, we put in the long trigger here. That one did not pay. And then there was a long trigger here, and that one did not pay. And here's the next short trigger. Just got put in a couple bars ago. And on the daily lines, you can see once again, just taking the trading with the candle color at the line. You can switch over to H1 and see what happens there. Oh, I still have that on there. Why do I still have that there? Properties, colors, none, and gets rid of that line. Since I got the spread dots, didn't need it. Just now saw that. So that's how you get rid of that line. And you see here, since I've turned on the computer, we've had about 6 pip movement. You can see here the ask fell below the peak of the bid, and then the bid jumped above the valley of the ask, and below you see oscillation. Finally it started to move up. In the Einstein line, once again, this is when I started, turned on the screen, and you see, wow, did the same thing there. I don't need that. There we go. So you can see, here's when I turned on that chart. There was the trigger, and you can see here what's happened. So far, what, up a couple of pips. So you see here the 111.08 right here. If the ask drops below that, we get selling. So it's telling you prices change direction, so you could exit with a 1.5 pip profit. So now, if the bid gets above that 106.9 right here, we will return to buying. And if you hit your F9 key, you bring this up, and what we're looking for is for the bid to get above the valley of the ask. Because if bid does not get above there, price can't go up. Okay, see, it just went up right there, right there. So you can see now price can go up. That's how that works. And here at the 1107, that's the highest bid. Once again, you can hit the F9 key. So right there. So if the ask stays above this price, price can't go down. It has to crack this. This is the spread between these two lines. So price has to cover that spread for it to come down. Sometimes it'll just get right there and keep going up. So that's why I created this. So anyway, fellow traders, just remember there's no reason to get upset or get mad. Bring those emotions to your trading, because it's not going to make a difference. So remember, it's not what you trade, it's how you trade it. So now get out there and drain the banks. And keep a smile on your face.